All eyes are on the Federal Reserve's preferred inflation gauge, PCE. The report came in lower than expected, a reassuring sign amid fears of further rate hikes. Overall, PCE rose just 0.4% month over month and 3.5% year over year. Core PCE, excluding food and energy, rose 0.1% on a monthly basis and 3.9% year over year. Now, even as we continue to think about how the Fed is weighing all of the data going into their November meeting, of course, still higher for longer has been much of the discussion that the markets have had to evaluate. And even as we're looking at the futures here this morning and continuing to evaluate where investors will continue to place emphasis on some of the economic data going forward, futures right now, at least looking at this and putting a bit of a positive spin on it as we're higher fractionally across the board right now.
Yeah, certainly there, Brad. And taking a look at what some of the street strategists are saying in terms of a reaction to this. Chris Rupke, the chief economist at Forward Bond, saying that Fed officials got everything they wanted in this report. When you take into account the consumer spending numbers in here, slowing to just 0.1% in August from a 0.6% move to the upside here in July, 0.3% move in June. So consumers look to be getting a bit more cautious when it comes to some of their spending patterns and exactly what they are buying. They're buying fewer durable and non-durable goods here in August. So we talk about how the Fed is going to look at this. Clearly, their fight with inflation is far from over. They certainly still do have a way to go. But in terms of what they were hoping for, maybe the best way to put that in this report, this is a pretty strong report and shows that their policy is working and continues to work.
Yeah, and this comes after some of the data that we had gotten earlier this week. You think back to the conference board data and really continuing to give us a little bit more inclination about where the consumer is perhaps losing a little bit of that positivity and perhaps staring further out and saying, okay, how can we best position our household balance sheets and for businesses out there, what a potential recession could mean for them. And so with that probability easing up for the next 12 months here as to when we would see a recession, this is starting to show up in even more data points as of right now. And even in some of the earnings that we're going to be breaking down over the course of today's show as well, where retailers are having to figure out, okay, on the lower income or mid or even high income, where there is some moderation, at least in some of the spending propensity as consumers do pull back in select categories here. Discretionary has been one that's of focus. We had an interesting conversation on that yesterday as well.